In this video, we're going to continue with inventory, where the previous lecture I gave you just an overview of the inventory process, that when we purchase items in inventory, purchase items to be resold, it goes to inventory, and then when those items are actually sold, then we go to, it moves from inventory to cost of goods sold. Inventory is a balance sheet account, cost of goods sold is an income statement account, and these really are the same items. If an item is sitting in inventory, that means it's not sold. But when the item is in cost of goods sold, that means it came out of inventory and was actually sold to a customer. Now, there are two types of accounting inventory systems or inventory accounting systems. There's the periodic system and perpetual system. Throughout the remainder of this course or this chapter and remainder of the course, we're going to always assume we're using the perpetual system. But I want you to be aware, especially if you're an accounting major, that there is another system called the periodic system. But we're going to use the perpetual system, and we're going to make entries and assumptions under the perpetual system, because the perpetual system is what I call the automated and real-time system. And you'll see two pictures here, because I like to use a sort of analogy or comparison of the perpetual and periodic system to the two of my favorite cartoons when I was a kid. If you've ever heard of the Jetsons, and some of you are pretty young, and so maybe you've never heard of it, but the Jetsons is one of my favorite cartoons, and it's a very futuristic cartoon. So here you see George Jetson with his family, and they're actually in a flying sort of ship, and so that's their normal mode of transportation. So they get into this ship, and then they fly around, and George flies his kids to school and flies himself to work, etc. Right? So that's very futuristic, because even in the modern day, we don't have anything like this. And you contrast that here with the Flintstones, and if you look at their mode of transportation, it's a car that everyone is sitting in. And the funny thing about the car is that in order for the car to move, Fred Flintstone actually has to lift up the car and sort of walk with his legs, right? So it looks like a car, but really it's like the synonymous with walking, and that's one of the funniest things about the cartoon. But the Flintstone is the setting for the Flintstone is sort of like the early period, right, where things are manual and nothing is really automated. And the setting for the Jetsons is the future period, where everything is automated and you just do everything with the press of a button. And those are very two similar comparisons to the perpetual system and the periodic system. So the periodic system is automated and in real time. Every time a purchase is made, inventory account is adjusted automatically. Every time a return is made, inventory account is adjusted automatically. Every time a sale is made, the inventory account is adjusted automatically. So in a perpetual system, as transactions are taking place each day or multiple times a day, the inventory account is adjusted every time there is a transaction. So it's updated in real time. In the periodic system, that is not the case. In the periodic system, there's transactions that happens throughout the period, and at the end of the period, right, there's an adjustment made to the inventory account to update the inventory account to match the inventory that's actually there. So in the perpetual system, the inventory account is updated every time and in real time every day. So at any point in time, at any time of the day, you can look in the inventory accounting system and say, what's the balance in inventory? And that number there is supposed to represent the inventory that actually exists right now in the store. Whereas the periodic system, if in the middle of the period you were to say to go to the system and try to figure out the inventory amount, you would not be able to, because it does not show in real time what the amount of inventory is. At the beginning of the period, the inventory matches what's in the store. But during the period, they don't update inventory until the end of the next period. Okay, so for the periodic system, we won't be using this system or this model throughout the course. There is, at the end of the chapter, for those of you who are curious, there is a section on the periodic, and it goes through the journal entries for the periodic system. But we're going to focus on the perpetual system, because that's what you'll see, and that's most common, where inventory is updated in real time every time a transaction occurs. Okay, so but what you need to be aware of, you need to be aware that there are two systems, and sort of the difference, the major difference between the two. One is automated and updated in real time, the other one isn't. And of course, the perpetual system is more used throughout the inventory process for tracking inventory versus the periodic system. And that going forward, we are going to be all the entries we make, and when I refer to inventory, just assume, unless I tell you otherwise, that we're using the perpetual system.